Hey everybody, and welcome to the Plan Stock channel. You're here with Mayur and me. If you're not familiar with me, I'm Jesse, and I run this channel. And Mayur, maybe for some of the newer people to the channel, who are you, Mayur?
Oh, sorry, it just cut off for some reason.
Okay, no. So I thought for the newer viewers, if you described who you are.
Yeah, sure. So I am an analyst at a firm called Zacks Investment Research. It's a company that produces research and data software that is used by portfolio managers and analysts. So I've been working closely with the investment industry for about 15 years now.
All right, awesome. So today we're going to talk about a little different company. And before we go in talking about that company, I thought we wanted to just show that the term plan stocks, which the channel is called, right, that it could be have a kind of a wide and open for interpretation when it comes to the definition of it. So me and Mayur talked about that before, and you had a good saying or the way we should look at the kind of stocks we're going to talk about and we're interested in. Normally, obviously, we focus a lot on plant-based companies like Beyond Meat, Oatly, the very good food company Tattoo Chef, but we realized that there are so many other companies out there that do good for humanity, basically, and the planet. So how do you look at it?
Yeah, so I look at it basically based on companies that are, small but are solving big problems in the world.
Yeah,
Um, there's a lot of research, obviously, on big companies out there that are doing big things. So we, thought that we may, present a format or a venue to discuss smaller companies that are making, big impacts on the world,
yeah.
solving unmet problems or addressing things head on that not many other companies are doing,
Yeah.
but also, still very, very early on in its S curve growth.
Exactly. And you have created something I'm going to show you here, guys. You created this first principal investments approach. If is that something you want to go through?
Yeah, so this is kind of how I go about thinking through my investment philosophy. It, this is sort of one aspect of how I pick stocks. There's another aspect as well, which is more driven by looking at bigger companies that are more mature in their investment cycle. But it's essentially a seven-step process that goes through the different items that I look for when making an investment in a company.
Yeah.
Um, so we can kind of go through each one, just really quickly. The first one is, we're looking for companies that have exponential revenue growth, right? And when you look for exponential revenue growth, that means that the market is adopting their product or service. That's the easiest and simplest way to interpret revenue growth, right? It's increasing number of people, either businesses or individuals that are endorsing, are voting, with their wallets with regards to the market adoption rate for their products. So that is exponential revenue growth, right? And then we talk about the total addressable market. So obviously, companies that have high growth, but how much more room for growth is there, right? That's where we run into some issues sometimes where companies grow really rapidly for a while and then they kind of taper off, right? And it goes from growth to stagnation. So we want to make sure we don't fall into that trap, right? So there has to be massive total adoption or a large total addressable market. And that total addressable market has to be identified based on what is it that they are working on. So this requires a little bit of research. It requires a little bit of digging to find out. Usually, the company will disclose that, so it does require going into the company's investor deck or their 10K. And a lot of companies do talk about the the overall total addressable market that they are operating in. Number three is they have to be solving a major pain point, right? Because that's how market adoption is driven by, right? How do you drive, growth is if you are addressing, a pain point, or if you are addressing something that, is not cutting it right now. There has to be a problem that the company is solving. Or if it's not solving a problem, it has to be cutting costs, right? If you're not necessarily solving a problem, but you're presenting a better way of doing something, then it should cut costs for the consumer or the business that is your primary customer. So one of these two things have to be happening. Either it's solving a problem that hasn't been solved yet, or it's cutting costs. There's also a third option as well. In many cases, is that it should just maximize utility for customers. So maybe if a company doesn't necessarily solve a problem, or if it's not cutting costs, but if it's maximizing the quality of life for an individual, or if it is just generating high joy for for customers, creating a pleasurable experience for customers, that can also be a source of continued growth. Number four is first mover advantage. This is very important. As we know from multiple business case studies, the first mover is the one that has a distinct advantage, right? Because if you're moving first on it, and if you have the superior product, then you have a significant advantage over the competition. Even if there is competition that does start to enter, if you have first mover advantage, it means that you have a leg up on the competition. First mover advantage is usually associated with runaway network effects. So network effects refers to more and more individuals that are your customers. And your customers, if they have a good experience with your products, therefore recommend those products to their friends. And that's how companies achieve exponential growth, is that network effect.
Well, yeah, I guess Tesla would be the best example there.
Exactly. Yeah,
Yeah.
Tesla is a key example there. I think Teladoc is another one. Where Teladoc has over 50 million paid users, 80 million total users. It's a huge, it's a huge, flywheel, if you will. Facebook is the classic network effect, right? That's the ultimate network effect, because the more the number of people that are on Facebook or social media, or any social media platform in general, the more attractive that platform becomes, because that's where everybody is. That's where all of the entertainment is. That's where all of the content is created. YouTube is another example of network effects. So these are very, very strong forces that reinforce your competitive edge in the area that you operate in.
Exactly.
Okay. Number five, strong returns on invested capital. This comes a little bit later, when the business is a little bit more fully ramped. Um, ROIC comes in when you start to generate profits. So sometimes companies that we talk about are not yet profitable, but they should show strong, what we call proxies to ROIC, which is on the gross profit line. Companies that have strong gross profit relative to the total capital base that they invest, right? That's how much they're investing and the return that they generate per dollar of investment. So companies that have high ROIC are very, very strong, performers with regards to the stock price in the long run. Companies that have high ROIC do great in terms of their share price performance. So that's very important as an investor. We want to be investing in companies that are earning high returns per dollar of total investment that they deploy.
Yeah.
Number six, reasonable valuation. And this is a very important part right now, because most companies traded at obscene valuations for the past several years. And that's why we see all of these companies that used to, 20, now coming back to reality. So only now are some of these companies starting to get very, very attractive from a valuation standpoint. So we want to see reasonable valuation, and that can be done either through looking at multiples, but more importantly, by running a DCF model where your forecasts are grounded in some sort of reality. And if those realistic forecasts of cash flow are still leading to undervaluation, right? If you look at the present value of those future cash flows, if that number is still well above where the stock is trading at today, then that means that it's trading at an attractive valuation.
Yeah, definitely.
We want to see that.
And we have a lot of those now that we normally talk about: Oatly, Beyond Meat. Some would say also Tattoo Chef, and the list goes on.
Hmm.
And then
Exactly.
the last part here, then.
And last part is what I like to look for, especially, which is pessimistic short-term market sentiment. Remember, the more pessimistic investors are, right, in the short term about any given company, the bigger your margin of safety is. This is an important point that classic value investors talk about. The bigger your margin of safety, the greater the likelihood that your investment is going to reap good results.
Yeah.
Um,
So
so we could be wrong by a lot and still be right on the stock. That's exactly what we want to see. And that's what's been happening with most of these companies that we talk about, on this channel. Almost all of them are extremely pessimistic in their short-term market sentiment.
well,
So, but now have they become a reasonable valuation? Only recently has that happened. It's been pessimistic for some time, but they still did not have reasonable valuations. But now I see evidence that there's both a reasonable valuation and very pessimistic short-term sentiment.
yeah, guys, I just want to let you know, the ones who are watching this video later on, also, that this first principal investments approach that Mayur is using, and I'm using now as well, I'm going to be putting it in our free Discord channel, guys. So, guys, if you're interested in our free Discord channel, take a look down in the description. So, I'm guessing then, what company are we going to focus on today?
So the company that I think has a shot at beating Tesla in terms of its total return over the next 5 to 10 years is none other than Invitae, NVTA ticker symbol. Invitae is a fascinating company because what I believe is happening right now is that we're at the very early innings of a shift in how medicine is conducted, how healthcare is conducted. For example, right now, if I were to sign up with a new primary care physician, right? I don't know if anyone here watching right now has any experience with getting a new PCP, or just anytime you change your primary doctor, right? One thing that you do as a part of your overall registration and paperwork is you sign or you fill out basically a survey, and that survey basically asks you some basic questions like, does your family have a history of cancer? Does your family have a history of heart disease? Does anybody in your family have a history of other rare diseases, of any neurological diseases, right? Alzheimer's disease, right? Autism. These are all significant diseases that we all know of and are major problems in the world, right? 30 million plus people have cancer, and yet they are basically diagnosed after you start to get symptoms of them. Like if you're a woman and you feel a lump in your breast, you go to your doctor and you start that process, right? The problem with this approach is that you're waiting for symptoms to occur before you start to seek treatment for them. You're waiting for symptoms to occur on prostate cancer. You're waiting for symptoms to start occurring in heart disease.
Which could be too late in many
Um,
cases.
you're waiting for exactly. So treatment only begins after you already started to see symptoms, and that is very, very late in the game. Invitae hopes to change that entire approach with regards to how genetic diseases are diagnosed and therefore treated. The earlier you treat these diseases, the better your chances are of successfully managing these diseases, right? And I think that's the case, I think with regards to anyone, any doctor that you talk to, any oncologist that you talk to. I'm no oncologist, I'm not a doctor, obviously. So, take this with a grain of salt. But if you speak to any doctors about this, everybody kind of agrees that, the earlier that you catch something, the better it is.
Yeah.
So, from a first principles approach in thinking, I believe that, the earlier you can catch, these diseases, the better it is for the patient, the better it is for the doctor that's providing care, because it increases the number of options that you have available.
Yeah.
And the better it is for even insurance companies, because once cancer gets, out of control, it gets very, very expensive to manage.
Yeah.
So it's a lose-lose for everybody. It's a lose for the patient, obviously, because your symptoms are way out. They've progressed way too much for years and years. It's gone for years undiagnosed. It's a lose for the doctor, because when it gets too late, the number of treatment options greatly narrows. And it's a lose for insurance, because now, chemotherapy, for example, is extremely expensive. So it's a lose. It's literally a lose for everybody. So enter Invitae, right? Invitae is the first ever clinical grade genetic testing company, where you have a company that has identified a significant number of biomarkers. Right, biomarkers are basically markers on your DNA that have a very high correlation. It's been proven statistically through clinical research that, individuals that have these biomarkers in their DNA are genetically prone to develop these types of diseases. And there are different biomarkers for different diseases. There's different biomarkers for, say, breast cancer, different biomarkers for prostate cancer, different biomarkers for different types of heart disease, different biomarkers for women's health, different biomarkers for other rare diseases like autism.
Yeah.
So this is huge, because, especially for anyone that goes through pregnancy and having a baby, you want to make sure that your baby is not at high risk for autism, for example. And Invitae has genetic tests for mom and baby that lets you quickly identify early on whether your baby has certain biomarkers that are associated with autism, for example, and other developmental diseases. So this is very, very huge, because for the first time ever, we have testing that can be done at the individual level. Up until now, genetic testing has basically been limited to surveys. You just have to know, oh, I had, my grandmother from my father's side had breast cancer. Um, my aunt had so and so. My uncle had so and so. Yes, there's a history of heart attacks in my family, right? But that's based on very, very sort of tangential evidence, because it requires you to think through, oh, I do have someone in my family that has this. However, this is very imprecise medicine, right? It's just based on surveys. And sometimes, even if you did, or even if you didn't have anybody in your family that has these types of genetically passed diseases, you could still be high risk at any of these diseases, such as within cancer or heart disease. So how would you really know that if you didn't have anybody in your family? Maybe you're good at identifying people within your family that had these diseases, but what if no one in your family had these diseases? Then you would just simply mark off on the survey that, no, I don't have anybody in my family that's ever had breast cancer.
And
I
my
don't know.
and my understanding is also that even though when you actually got to the hospital and they started checking some of these, they're not going to look at the same kinds of variables as Invitae does. Not even a long shot.
Exactly. So Invitae is in a very unique position because they not only have the broadest suite of genetic tests, they also have a lead on the total number of people that they serve. I believe over 2.5 million people now have used Invitae, at least in 2020, just in 2021 alone. So they've disclosed this on their investor deck. 2.5 million people, and I can share my screen here. Over 2.5 million people used Invitae's genetic testing in 2021 alone. As you can see here, this is more than anybody else in the world. And of that 2.5 million people, almost 1.6 million people are participating in data sharing. So this is the other part of Invitae's business. Invitae earns revenue from the sales of these test kits. But what we started to see now, which is really the Super Bowl scenario for Invitae, is data and service revenue. This is data as a service. And so this is very, very early on. In 2019, they earned about $15 million total in that category of data and service. That grew to 26 million in 2020. That grew to 39 million last year. This
Yeah.
is going
So
to become a bigger and bigger component of their total revenue
yeah. So we move on
going
to
forward.
specifically their growth possibility then, which is basically up 65% last year, right?
65% last year. Yeah,
Yeah.
this is significant market adoption. So going back to that, that first principle sort of thinking, right? We want to see exponential revenue growth and market adoption. So that's where this is right here. We've got, huge growth for many years, right? We've saw 171% growth from 2016 to 2017. A lot of times companies can grow rapidly because they're on a very small base, but you see that this has been sustained now for multiple years on an increasing base, right? They passed $100 million in revenue back in 2018 and have since compounded at more than 40% since then. And over the past year have actually increased by 65%. They're guiding for about 40% growth this year. So you'll see that the growth rates are a little bit uneven, but that's kind of the nature of exponential disruptive growth. This is a company that's doing something that's never been done before.
Yeah.
Genetic testing is a brand new area of medicine, and it is increasing in popularity. It's increasing in adoption, and it's because it just fundamentally makes sense. Why would you rely on surveys or anecdotal evidence on individuals' genetic, makeup when you could directly sequence your DNA to understand exactly what biomarkers exist in your DNA specifically? This is what we call personalized medicine. This is very, very acute in nature. It is down to your individual genetic makeup. So rather than relying on surveys or anecdotal evidence, oh, I had so and so on my mother's side, I had someone on my father's side that had this some 25 years ago. I don't know if that means anything for me. Who knows, right? That's very, very imprecise with regards to treating or at least diagnosing and identifying genetic diseases. This is the real way to do it, is to actually take a look at your actual genetic makeup, to sequence your genome and to understand exactly what's going on in your genetic profile. This is tailored medicine. It's strategic. It's acute. It's personal to you,
So
and
if we take
yeah.
a look at what kind of TAM possibilities do we have here?
So the TAM is massive. So you can see that here. If we look at the total, addressable markets from age 0 to 17, right? This is newborn screening. The biggest things that are concerning for newborns is looking for signs of autism, right? So they say that once you have a baby, one thing that you want to start watching after the baby reaches a certain age, around 6 months, 7 months, 8 months. If your baby is not yet smiling, if your baby is not yet laughing, um, if your baby has difficulty following, like, objects across the baby's visible spectrum, that could be evidence that there is early onset of autism, right? Babies that don't laugh or don't smile, at least, by that age, it's starting to get concerning, right? So again, you're waiting till it's very, very late in the game, for autism. Now, this is not to say that this is a complete solution to autism. It's not a miracle, cure to autism. The idea here is to catch it early, right? If your baby has in his or her DNA, um, a high likelihood of developing autism, it's very important for you as a parent to know that. And this is something that I think everybody will be doing in 10 years. And that's what CEO Sean George has been talking about. 10 years ago, nobody did genetic testing. 10 years from now, everybody will be doing genetic testing. Why? Because it just fundamentally makes sense. Why would you not want to know what's in your DNA? Because if you can catch these genetic diseases early on, then you have many, many more options to controlling that disease and maybe even reversing them.
And I think that's an important point here. That me normally, I'm of the understanding that genes are important, but they don't control your destiny. Because you can change your life. Like the typical thing is that, yeah, my mom had heart disease, my grandpa had heart disease, so I'll likely have it too. So I might just keep living my life the way I am, which is not true. According to a lot of research, maybe genes has to do with 1 to 3, maybe 5% depending on what kind of heart disease, what kind of diseases, what kind of cancers, and you're likely follow the same path if you live the way you eat the same way, you exercise the same way or not exercise, you have the same kind of stress. But if you do change, the way you eat and the way you live your life, you have a good chance of turning it around. But then that's why I think this is a good idea to find these things out, because then you'll get an even stronger indication why you need to change your life. And my understanding is that you get a advisor for free too.
Exactly. Yeah. So the way that the business works is that once you buy one of these test kits from them, and they're very affordable, by the way. So this is another thing that Invite is driving, is a decline in cost. So these genetic testing was extremely expensive 10 years ago. It was available, but very, very expensive. They've driven these costs down to just a couple $100s now. So this is affordable for most people. And that's going to be important for not just direct to consumer, but also by gaining adoption from insurance companies. If it becomes extremely inexpensive to do this, that will drive increasing market adoption and therefore reimbursement rates. That's
So
also very, very important for them to achieve this grand vision that they have of basically everyone doing genetic testing. So when we talk about TAM, the TAM is basically everyone on the planet. Every baby that's born should have genetic screening done. Everyone that is entering, this age group right here, where these issues of say prostate cancer starts to get more and more concerning. That's the TAM. Your TAM is everyone that is entering this age group. So that's essentially billions of people on the planet, right? So the TAM is essentially everybody. Because again, unless if you really don't care about what your genetic profile is telling you, anyone that wants to know whether they are at high risk of any of these genetic disorders, neurologic disorders, neurodegeneration like Alzheimer's, age-related disorders, right? These are all things that everybody wants to know and they want to stay on top of early on.
yeah.
So Invitae is the company that has been built. They've been building this company now for 7 years since they became public, and they've been making a number of acquisitions that bolsters this. Because remember, genetic testing, the way that it has been made available through Invitae, has never been offered before. So this is a brand new sort of pathway that they are blazing. So they recently acquired a company called Archer DX. Archer DX is working on liquid biopsy. Liquid biopsy is a method of genetic testing, which basically looks at it's exactly how it sounds, liquid, in the sense that it takes your DNA in the form of liquid, basically your blood. It also takes a look at other areas like your spinal fluid or even your urine, and perform tests on those liquids to be able to understand exactly what's been going on with regards to oncological disorders or oncological diseases.
Yeah.
So this is in that realm of breast cancer, in the realm of prostate cancer, and other types of cancer. So this is all screening in the area of what they call precision oncology.
Yeah.
And recently, they just launched a new thing called MRD screening. They put out a press release on this. This was back in January, and this is extremely exciting because what they're doing now is they've developed a test called the MRD test, molecular residual disease, which is basically a test that will provide oncologists to understand whether the therapy that they are providing to their patients is working or not. So let's say you're an oncologist, you're helping one of your patients beat cancer. They've been going through chemotherapy. The way it works right now is that, to understand whether the therapy is working or not, that patient has to go through CT scans. So a CT scan will basically look at the physical presence of the tumor in your body. That is at a much broader level. So it requires the tumor to basically be present and detectable by a CT scan, which is more of like an actual scan of your entire body, right? Whereas what Invitae is doing is a scan at the cellular level. So this is much more micro versus what is the existing system that we have today. So this will look at the presence of cancer at the molecular level, and that will give you a much better explanation as to whether the cancer is being defeated or not. This is an example of precision oncology,
Yeah.
precision medicine, personalized medicine. It's never been done before, and the CEO Sean George, as well as the chief scientific officer in charge of this entire program, they're very bullish on this. They think that oncologists are going to start demanding this test be made available.
Yeah.
So when you start to demand it, that's when hospitals start to order it. That's when insurance companies start to cover it.
Exactly. Yeah, we can see if we take a look at the prices here, like you said, they are very affordable here, from reaching from $250, and it says here which part of these testings actually your insurance can cover. So again, from $250 to about $350, depending on what you're using. For sure. I also thought we could just mention the leadership. You talked about the CEO here, Sean George, who's a PhD. I actually really like that he holds a BS in molecular genetics from UCLA, an MS in molecular biology from US Santa Barbara, and a PhD in molecular genetics. So I kind of feel like this is a person who knows what he's talking about.
Yeah, I like him a lot, and he doesn't own a large piece of the company, but that's primarily because of dilution. So he hasn't sold many of his shares, so that's the most important thing to remember. He hasn't sold a huge number of his original position. The company has gone through and this is one of the bear cases for Invitae. is that they've gone through extraordinary dilution. It's not been very shareholder friendly at all. But I think it's by design, though, because they are building a business that is so complete in the sense of the suite of products and services they're offering that dilution was necessary, in my view. I think there's no other way to do it. They could have taken out loans to do it, but remember, this is a long process. They've been public for 7 years, and it's usually hard to get loans with a favorable interest rate for 10 years plus out, right? The further out you go, the higher the interest rate that investors will charge. And so, because they were very far out from reaching profitability and cash flow positive, the only option for a company like Invitae, which is again at their very very early stage of their exponential growth, years out from profitability, it doesn't make sense for them to choose any other financing option other than equity. So that's why they did that. And they've been making a number of acquisitions to bolster their product portfolio. So I think all of their dilution has been necessary, and frankly has been the right way to go about doing it. Because remember, Invitae, just like every other company out there, achieved stratospheric multiples. So it actually makes a lot of sense for them to dilute at those elevated,
Yeah, I thought if we'll just take a look at their, yeah, they're trading right now around six point forty
which is
six
just pretty much.
dollars. Are you still
Yeah,
there?
so this is why it's starting to get very very attractive now.
Yeah,
So Invitae is now at roughly a 1.5, 1.6 billion dollar market cap, fully diluted, and they have 1 billion in cash in the bank. So from an enterprise value standpoint, this is getting very cheap. Now, they are guiding for a lot of, cash burn, right? So that's probably the reason why it trades at such a low multiple to cash.
yeah.
But it's still, very, very attractive. So you can see this is the 2022 guidance here. They're guiding for 40% growth this year. Again, very strong growth. There's no signs of slowdown in their business. They're guiding for 45%, gross margins. Again, very attractive overall. And they are guiding for 600 to 650 million dollar cash burn for this year, which is a lot, right? And that's one of the reasons why the stock has underperformed. Is there's a lot of dilution and a lot of cash burn. However, that cash burn is slowing. So last year they burned over 800 million in cash. This year they're guiding for about 600 million in cash burn. So it is slowing in cash burn. So that's definitely a good thing to see. But again, this is the reason why the stock has been underperforming.
Yeah.
I believe, however, that they are, positioning themselves to reach operating cash flow positive by the end of next year. That's my personal expectation. Now, the company has not said this themselves, but they are starting to talk about this. If you listen to their calls, their earnings call, as well as their investor presentation, they're starting to talk about operating cash flow now. And they've been mentioning this over and over again. So they have not yet guided as to when that's going to happen. But I believe that given the fact that they have now laid the groundwork for building out their oncology business, that's been kind of where most of their cash burn has been coming from. Is their Archer DX acquisition, the launching of this MRD test that they just did this year. They have been building, investing, and at some point their investments will finally peak out, which will allow their gross margin gains, and therefore their overall P&L gains, operating leverage gains, to start to halt that cash burn.
It's kind of like the similarities with Tesla again, that they're focusing in on R&D the first couple of years, putting out all the pieces, and then when they're ready to go, we could expect this escape velocity.
Exactly. Yeah, and you can see that these numbers are getting very attractive here. So $640 million of revenue this year, 45% gross margins. Let's just round that up to about 50%. You're talking gross profit of over $300 million, and this is on a company that's trading at 1.5, 1.6 billion market cap total. So you're looking at a price to gross profit multiple of 3 to 4 times at most, 5 times at most. That's very, very cheap. Companies that do 50% gross margins, and that's their long-term guidance, by the way, 50% gross margins, and they're going to get to that because of this mix of their test equipment as well as their data revenue. That's very high margin revenue. This is the bull case for Invitae. Is not only is their their genetic test sales going to take off because of the fact that everybody essentially is going to be essentially demanding this, but all of this data that they're aggregating is extremely valuable. So remember, they actually have a head of AI. It's actually quite similar to Tesla, right? Tesla has Andre Karpathy, who is their head of AI. They're using all of this data that they're aggregating from all of these cars that are driving around autonomously, collecting data, presenting feedback. There's a positive feedback loop. So every time that the car makes a mistake, they trigger that event, they go back and they use that to train the neural network to not make that mistake again. And so the more mistakes that these cars make, the more it learns, and therefore the fewer the mistakes it continuously makes going forward. That builds their neural network. That's exactly what they're doing here. With more and more data that's being aggregated, from people that are buying these test kits, again with the patient's permission, of course.
Yeah.
They're aggregating this data such that this data is going to become extremely valuable for in the future, not just for the patient, for understanding and how to manage their disease going forward, but also for drug development in the future. Imagine what companies would do to get access to genetic data like this.
Yeah.
And Invitae has 1.5 million people and growing with regards to how much data they have aggregated
Yeah.
here. So they have more data than anybody else with regards to genetic data itself.
So on many points, they really have a first mover advantage, not on just a single one here, and several moats to some extent also. Then
Exactly. This is, according to Matthew Davis, their head of AI, the largest genetic data set in the world for a private company. That is, I think perhaps I'd have to caveat that, but I'm pretty sure Invitae is, if not the largest, it's in the top three, I would say, in terms of total genetic data.
yeah.
I don't misquote that, but again, this is very, very substantial data. Almost 1.6 million people contributing to their data set,
Yeah.
and they're using that data to identify and guide drug discovery and drug therapy, drug development in the future.
Yeah.
So this is extremely valuable data for the patient, for healthcare providers, and for future drug development. I think it's a perfect storm, and it just makes too much fundamental sense.
Well, I thought just before, then also before we end this, go just quickly talking about potential threats and competition. I thought it'd be good to just mention that if you don't know it already, Kathy Wood has been talking about them over the years quite a lot. She's been super bullish about them. She's also said that they are the equivalent to Tesla in this field. She also compared them to Amazon. And they don't have as big of a cut anymore, but that's also because other companies in their funds have grown a lot. But if we just take a look at, let's see here, we have on their ARC G, which is like the gene companies to have, genomics companies, they are at, let's see, 31. And it's about 34.7 million they own in them, about 1% of their overall fund. But they'll also have them in their larger fund, their ARK K, right? And there it's on the 27th place at 107.4 million, about 1% there too. So I thought that could be also something just good to mention there.
Yeah. This is this is a fascinating business, and it just makes so much sense that look, companies that have 50% gross margins, here's a way to think about the valuation here. Companies that have about 50% gross margins within medical devices, right? If you just take the aggregate industry, um, once they scale, right? Once the investments finally start to slow down, and they're already starting to guide for that, by the way. They are expecting SG&A expense to be roughly 20% growth this year over year, and they're guiding for 40% top line growth. So you can already start to see that the operating expenses are starting to slow relative to revenue growth, right? So businesses that within the medical devices industry that do 50% gross margins are able to do 20 to 25% operating cash flow margins, right? And it's very, very easy to see, Invitae generating $1 billion in revenue by 2023. In my view, they're at 640 this year. Or sorry, I should say by 2024, $1 billion in revenue, just being very conservative. Just by continued increasing adoption of genetic testing as more and more individuals discover the benefits of genetic testing, as well as more and more doctors, including even primary care physicians, see the value of genetic testing. 1 billion in revenue seems to be a cakewalk, right? To me, and at 50% gross margins, I think they can do at the very least 20% operating cash flow margins. Again, once the business is fully ramped and optimized for profitability. Right now, it's not optimized for profitability, again, because of the investment cycle that they're still going through. So on $1 billion of revenue, they could be doing, say, on the low end, 20% operating cash flow margins. That gives you about a $200 million operating cash flow by 2024. That's my personal view of where they're going to be at. The stock trades at $1.6 billion market cap today. That's a price to cash flow of 8, right? A price to cash flow of 8.
Yeah, because I
Um,
thought like long term perspectives here, like probably really long term. You mentioned that you could see them 25xing from here.
exactly. I think this is at this point, because of the macro environment, this stock has gotten so trashed with everything else out there that at this point, and I don't use this word lightly, I think Invitae is a deep value stock at this point. Um, it trades at 8 times what I think they're going to be doing on 2024 operating cash flow. For a business that's going to be growing at 40 to 50% for the next 8 years, 10 years, potentially. Um, Now, there's going to be competition, of course. Every business, every industry has competition. But I think Invitae is the most well positioned to capture a plurality of market share within genetic testing. And because they have that plurality, they have the lead on data. So even if other companies start up, genetic testing, and there are other companies that do this, um, I think because they have such a large data set of genetic data, they have basically the strongest sort of investment case to make with regards to the data revenue that they're going to be generating in the future. And this is very, very early on, right? Right now, in 2021, they just did $39 million of revenue from data. This is going to be the biggest driver of long-term shareholder returns in the future. Again, this is driven by their testing, right? Which is in these other three categories here: oncology, which is going to be the biggest by far, women's health, and then rare diseases slash other. But data is going to be where the margins come from. That's going to be where most of their margin contribution is. This is basically software like revenue. This is recurring revenue. This is service revenue. And this is going to be data that is going to be sold, again, with patient permission, which is another fascinating area, too, because I think there could be a future where individuals could monetize their genetic data, too. So you could sell your genetic data to Invitae, or Invitae would then pay you based on um, the revenue that they're generating based off of your genetic data. So that's a fascinating future that could also, be intriguing as well, where you could do a revenue share, kind of like an Uber or Lyft model.
So when it comes to threats, you don't see a really huge threat, because I know with there's been other people talking about, like, hospitals. They have a whole other kind of capital structure, and they have resources that are much bigger right now than Invite. That they could basically, they do testing, lab testing there, right? But my understanding is that it's very simplified compared to this.
Yeah, no one has as broad of a suite of products as Invitae. So we can actually go, like, if you go back to their, to their website, right? Um, Nobody has this level of clinical grade, and this is not. There are very simple, genetic testing that you can do. There's a site called 23andMe, which is kind of a more of a fun sort of way of looking at it. People can look at their ancestry, things like that. That's very, very sort of, you know, kind of like it's more like, you know, very, very simplistic genetic testing. It's not true genetic testing. This is what we would call clinical grade testing, where they use your DNA and sequence your DNA using what they call long form sequencing. So there's a company called Pacific Biosciences, which is the company that they partner with. I think that they should actually consider merging. By the way, that's another discussion entirely. But I think that company has a fascinating technology to long form genetic sequencing. Long story short, basically takes a look at all of your genetic factors and performs a complete analysis of your genetic profile. So identify all of the biomarkers that they know of that are highly correlated with genetic diseases. So this company, alongside Pacific Biosciences, has a complete solution that nobody else provides right now.
All right. So a lot of things there to consider for sure. And this is a company that we might probably talk more about on the channel, guys. And again, guys, if you want to connect with Mayur or me or both of us, take a look in the description. We have a free Discord channel there. There's a new one now that we created a channel there for NTVA, right? For Invite. So we can get the discussion going there even further. Also connect with Mayur otherwise on Twitter. He has a strong following there of about 16,200 people. So quite extensive. But yeah, so feel free to join us, guys. And also feel free to smash that like button and subscribe to the channel if you are interested in companies like this. Also other like pure play plant-based companies like Beyond Meat, Tattoo Chef, Oatly, to name a few, guys. So we're going to talk about other interesting companies in these spaces too. All right. So thanks for today, guys, and thank you, Mayur, for putting all this together. And you'll see him soon again.
Sounds
Okay.
good. Thanks, guys.
Thanks. Bye.